Good day, fellow investors. Some of you asked questions about real estate. I would appreciate a good video about buying real estate for living, not necessarily as an investment. What should be the ratio between down payment and loan, when it makes sense to buy and when to rent. So, important topic because once you sorted out the place to live, that's very important. You know how much you can invest and then build wealth in another way. Also, another question comment was more real estate, so let's do that. Now, on the ratio between the down payment and loan, it's very easy. It depends on the law. In the States, I think you need to have 20%. In the Netherlands, you need to have 0% to buy a house, zero down payment. So that's crazy Europe, but depends on where you live. And the second function is, of course, cost. Because now the 30-year fixed mortgage rate in the US is 6.3%, 7 somewhere I have seen, somewhere it's even higher, but it is significantly different now than when it was 2.67% just a while ago. That is a huge difference, and we'll discuss more about this difference a bit later in the video. So when it comes to down payments, just think, okay, if the interest rate is very low, somewhere in Europe it's still very, very low, so it pays to take a long-term loan, fixed interest rate with 2-3%, and then you try to minimize the down payment as much as you can, because 3% inflation, 3% loan on interest, so you're practically paying no real cost there. If the interest rate is 7% and average inflation, let's say, will be 3% down the road, maybe 4, maybe 5, but still that's costly and risky. So you might want to think 7% nominal returns certain, the lower is your debt payment. And now we're already talking with higher interest rates about scenarios where it pays not to be in debt anymore, which is opposite to what was the case just 2 years ago. Now, on renting versus buying, again, discuss the costs, analyze the costs. For example, I was living in this flat exactly in the Netherlands in Hilversum 2015, and I was paying 900 per month. Now that flat just was rented out, the above one same size, for 1,500 per month. So if you are renting, you have to know that your rent will go up with inflation. So that's a cost you have to include in the calculation. In 2015, I was looking for a full mortgage, zero down payment in the Netherlands, fixed 30-year loan, because I could buy a similar apartment to this one I was renting and pay about, my calculations were 700 per month for interest and paying down the loan over 40 years. So, of course, it was much wiser to buy than to rent, because that was the comparison of costs. Now, depends on the cost. This will now likely cost, it was about 200,000 when I was living there. Now it will likely cost 300K there. And immediately with higher interest rates, let's say 5%, not 3% like I was having, you have to see whether it still pays. For living in the Netherlands, likely it still pays, because this will be 2,000 in 5 to 10 years, and your fixed mortgage will forever be the same. So that's something to calculate. So the key is always to compare the costs and likely future developments, because this change from 2.67 in the States to 6.3 or even higher is huge. Because if I need $500,000 with an interest rates of 7.5% for 30 years, my monthly repayments are 3.5 thousand, and for $500,000 over the years I pay 1.2 million. Just look at the huge difference just a few months, year ago, when the interest rate was 2.5 for $500,000. you would pay 700,000 over 30 years. And I can guarantee you that if you buy something for 500 million, this in 30 years will be about 2 to 3 million. So you'll make huge. You'll still make here good money, but look at the difference in monthly payments. This is what kills you. So I was always about taking fixed interest loans, but now with 7%, 6, 7%, if I must buy a house, it's always a gamble. You have to see how much liquidity you have no matter what happens, but it is high and it can go to 15%. It was in the past. You never know about that. So you have to calculate the costs of renting versus living, and you have to calculate for each own situation. That's the only answer I can give you. From my story, we just finished a house, and if you maybe remember, I sold in August all my stocks that I held personally just to take a pause from investing, from the influence, from the incentives. I'll start now, but then I had that money and I decided not even to look for a loan, close the payments on the real estate because peace of mind, whatever. And now, from the next 5, 10 days, I'll start looking to build my wealth accumulation vehicle through the stock market investment portfolio. Also, new country, everything. So much more suitable for me personally. As said, for investing in real estate, it is always really personal. You have to put yourself in your situation. Someone who is moving fast maybe cannot find great deals for buying, better renting. Someone who is more stable or would love to rent out that business or that house later, think it as a business. You see, okay, if I have a mortgage of 1,000, the rent is 1,200, 500. I can always rent it out, have the rent, pay for it with the costs, with everything associated. If you like doing that, then that is always real estate. I always say real estate investing is about investing into the property, individual property, not about the market. It's about the property, the deal you can get, you can structure, and how it fits you. And if you do that, please use the rule of 66, which is an older video, but extremely important if you're thinking about buying real estate. Thanks for watching. I'll see you in the next video.